Good afternoon and welcome to the POLYMETAL International PLC investor presentation. Throughout this recorded presentation, investors are being listen-only mode. Questions can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Maxim Nazimok, CFO. Good afternoon.
Good afternoon, ladies and gentlemen, and thanks for attending this broadcast. It is linked to the recent first half 2022 financial results announcement, and also to the recent announcement about a general meeting which is being carried on right now, and which will be voting finally on the 12th of October. So I wanted to use this opportunity to reach out to our expanded retail investor audience, discuss the company's results, discuss the company's plans, including any corporate activity, and also explain to those interested the details of the exchange offer that is now being put on vote. I will start with a brief overview of the first half of 2022 financial results. It has to be obviously noted that the company has been undergoing unprecedented challenges due to the conflict in the Ukraine and related sanctions and counter sanctions that have affected our business. Therefore, the numbers are obviously reflecting that. Just briefly overviewing this, revenue went down 18% on the back of the decreased physical sales, as we had to reroute our traditional sales channels to new markets, predominantly in Asia. EBITDA also went down 35%, in addition to the already expected inflation that has accelerated already since the second half of 2021. We saw additional impacts from increased logistical costs, increased costs of consumables and spares that are being imported, with, to be honest, very little support from the exchange rate. So the accelerated inflation has played a role, with total cash costs going up 20% and all-in sustaining cash costs going up even more, 34%, reflecting the volume factor as more or less fixed element of the sustaining capital expenditure was spread over a smaller amount of ounces sold. Underlying net earnings were still positive, $203 million, although this is half of what we saw in the first half of 2021. And we have experienced meaningful negative net operating cash flow in the first half of the year, again driven by the accumulation of unsold metal inventory and also accelerated purchases of consumables, spares and equipment, as well as continued progress on our construction projects, most notably Box 2. And there actually a few things had to be again accelerated in the current environment to ensure that we are able to ship various pieces of equipment in the light of the recent situation. So as a result, we saw a negative free cash flow of $630 million in the first half of the year. We expect this trend to be reversed in the second half, and this is already happening as we speak, as we are beginning to unwind, first of all, the bullion inventory. And the net debt, which rose to $2.8 billion as of July, is already slowly but steadily coming down. A brief overview of the key KPIs in the business. As I mentioned, the key driver behind the revenue dynamics was the sales volume change, almost 18% versus first half of 2021, on the back of stable production. Average realized prices were actually more or less stable in relation to gold, and slightly lower in relation to silver, but this is not because we are experiencing any additional discounts from the new markets, but rather the market dynamics of gold, which spiked pretty heavily in the first months of the Ukraine conflict, but then quickly reversed, and we are now seeing significantly lower levels. Total cash costs, domestic inflation has played a role, and probably the most significant role. This was partially expected because if you recall our original cost guidance for this year, that was already something like 13% above last year's level. In reality, we are seeing 20% inflation rather than the expected 13%. To a certain extent, change in average rate process is also playing a role. And as I said, the foreign currency is not very helpful because ruble quickly depreciated against the dollar, but then reappreciated, and actually reappreciated quite significantly even compared to the January 2022 levels. Whereas in Kazakhstan, we are seeing a more stable picture where tenge has somewhat depreciated around 12% versus the beginning of the year. The inflation has spiked, but we're not obviously seeing any of the additional logistics or consumables related. The EBITDA, well, basically is a combination of the revenue dynamics and the cost dynamics, and I experienced a 35% decline. And I will probably spend more time on net debt reconciliation because that was, quite significant. I would probably point your attention to bullion and concentrate inventory accumulation of about $200 million, increase in receivables, and funding of the critically important contractors and suppliers. That was another almost 300 million, and accelerated purchases of equipment and spares, probably another 100 million, still significant in the current environment. I also have to mention that due to the exchange rate dynamics, we actually saw the notional increase in net debt as well, which is related to forex denomination of the ruble denominated debt. It added quite a significant $355 million. It has somewhat reversed already because as of 1st of July, we saw the lowest rate of dollar against the ruble. But we'll see how it evolves going forward because forex remains actually one of the few unpredictable areas in the business. I will probably conclude the presentational part by talking about the 2022 guidance. We are forecasting, as initially forecasted, 1.7 million of ounces produced. All-in sustaining cash cost guidance had to be increased, unfortunately, due to the additional inflationary pressures and due to additional.
Maxim, I think we've just lost your connection there. 1 second, Maxim. If you could just say a few words, Maxim. Sorry, I think it sounded like you just moved. I think your signal's just gone.
Yeah, I actually had to move out because some kids came into the meeting room.
No problem at all. Okay, let's thank you.
So let me in just 1 second. I will find a safer place.
Thank you, ladies and gentlemen. Just bear with us while.
Do you still hear me well?
We can hear you now. You did fade out a little bit when you were on the move there, but once you get settled, we'll just check that connection.
Okay, I'm back.
And carry on.
I'm back.
Fantastic. Thank you, Maxim.
Sorry, apologies for the interruption. So, turning over to 2022 full year guidance, we're still forecasting the 1.7 million ounces of gold equivalent production in line with the previous guidance. We have raised the total cash cost guidance by $50 per ounce due to the additional inflationary pressures. And likewise, we have raised the all-in sustaining cash cost guidance to $1.3–1.4 thousand dollars per ounce on the back of the stronger exchange rate and inflationary pressures and additional costs. CapEx will be in the range of $725–775 million. Again, a lot will depend on the dynamics of the foreign exchange rate, but it's very likely we are still going to see the stronger ruble for the rest of the year than it was originally expected. With this, I'm actually concluding the presentational part of our meeting, and I'm happy to answer any questions received on the poll.
That's fantastic, Maxim. Thank you very much indeed for the presentation, and thank you to everyone for submitting their questions. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab just situated on the right-hand corner of your screen. But just while Maxim takes a few moments to review those questions submitted already, I'd like to remind you that a copy of the slides and the published Q&A can be accessed via your investor dashboard. Maxim, if I may, we've had a number of questions, both pre-submitted and throughout today's meeting. I'll start. The first one reads as follows. Has the board/management considered spinning off the Kazakhstan part of the business and relisting both shares, LSE shares, not MOEX, and shares of spun-off entity in Hong Kong?
Yeah, well, thanks for this question, and that actually leads me into the part which I forgot to mention in the presentational part of the meeting. By way of update, in July, management and board have announced we are evaluating the options to dispose of the Russian assets. And then subsequently, on the 5th of August, the presidential decree issued in the Russian Federation actually banned the outright sale of Russian assets as was originally envisaged. So we are now looking at alternative options to change the structure of the jurisdictional holdings of the group. And the spin-off is actually one of the options on the table. It's not the only one, but it's definitely the one which actually, looking at the feedback we have received from various investors, was evaluated as more welcome compared to the original option of straight outright sale.
Fantastic, thank you, Maxim. Next question reads as follows here. Have you managed to sell the accumulated inventory in Q3, and have you managed to sell this at market price?
Yes, we're selling everything at market price. It's probably not very helpful that the market price over this time has declined quite materially by about $100 per ounce, but we are not incurring any jurisdictional discounts, so to speak, when we are selling our production to the new Asian counterpart. The wind down process has progressed quite substantially, I have to say. But it's not complete. So we are still selling material stockpiles of mainly bullion inventory from the stockpiles produced in the Russian Federation. We probably have released about $100 million in working capital over the course of the month.
Fantastic, thank you. Next question we've got here. Has the net debt started to decrease in Q3?
Yeah, and that actually means that net debt has started to decrease. I have to mention though that July and August still saw some inventory accumulation. So first it has increased above the $2.8 billion level, but now it's gradually coming down. So we are below 2.8 billion at the moment already.
That's great. Thank you very much indeed. Let's go for the next one here. Has the latest sanctions from the US and EU last week affected POLYMETAL financially or operationally and not had an impact?
I don't think last week's sanctions specifically targeted our sector. We are still, evaluating the impact, but out of the, overall accumulated sanctions that were imposed since the start of the war, these were not the ones which materially affected the business.
Thank you. Okay, is an outright sale of the Russian assets no longer an option to the decree?
Let me put it this way. It's not an immediately available option. And that's why, as we mentioned on the first results call with our CEO, we're first evaluating the options to redomicile the parent company of POLYMETAL into a so-called friendly jurisdiction. and that would unlock significant additional options to the business, including, if need be, a potential outright sale. Because right now, under the decree, we are not able to do this.
Thank you. What are the main reasons for the exchanger offer if 11% of the shareholders on the NSD are unable to do this?
Well, the total amount of shareholders blocked in NSD is 22%. The current exchange offer is available to approximately 11%, but we think it's already a lot. It's 50% of those stuck in NSD, and we want those shareholders to help those shareholders out. It is unfortunate that due to various regulations, both Russian and Western, the exchange offer in its present shape, cannot be offered to both categories of shareholders. But this is just a first step. Obviously, once this offer is successfully complete, we will turn to the remaining 11% Russian resident shareholders and see which are the ways that we could employ to unlock them as well.
Thank you. And a follow-on question from that, really, are your plans to stay on the LSE long term? And if the 11% of shareholders on the NSD are stuck, are you considering leaving MOEX and moving to a different exchange? That's something obviously we touched on that first question, I think, as well.
I think maintaining the London listing is one of the primary priorities of the corporate management and the board of POLYMETAL at the moment. So we are very much committed to maintaining the listing. We are doing everything that we can in terms of maintaining the corporate governance, the free float, and so on. And I can say likewise, we would very much want the Moscow listing to stay. But again, as the situation evolves, and as we are considering various options in terms of the corporate structuring, we'll see how specifically the Moscow listing would fit into those plans.
Thank you. We will be in a positive free cash flow from Q4. If not, what quarter do you expect free cash flow to return?
Yeah, I think we should be free cash flow positive in Q4. Barring any, again, unexpected, unknown unknowns, so to speak. And I think this should be sustainable. Again, we mentioned this briefly on the call 2 weeks ago, that overall the working capital levels for the company have increased due to the current geopolitical situation. But we believe that working capital accumulation has been substantially over, and we are drawing down the excess working capital, and with this we should be going back into our normal free cash flow positive mode.
Thank you. If you sold all of your stockpiled product by the end of this year, how much do you forecast this would reduce net debt by?
Depends on a number of macro variables, mainly the gold price, and to a certain extent the ruble exchange rate, because some of the debt is ruble denominated. But I think a reduction of at least 500 million to the level as of 1st of July, so roughly to 2.3 billion of net debt is well achievable.
That's great. Thank you very much indeed. Why have 2 directors of the company resigned? How are your searches for replacements going?
Well, this is very recent and very unfortunate. I'm personally very sad to see both Ricardo and Giacomo go. They were valuable parts of the board process, especially Giacomo, who served on the board for quite a long time. We have obviously already initiated the search for replacement directors. We need a new chair of the audit committee, and we actually need someone to take the role of the chair. So far, the search is progressing, and I think we will, reconvene the full board definitely in the coming couple of months. We will be, again, quite picky, because we want to maintain the high standard of governance at POLYMETAL's board, and that's why the search might take a few weeks, maybe a couple of months. But we are very committed to maintain the full functional, diversified board. The reasons were, really personal. So they are not related in any way to the company's performance or risks.
Thank you, Maxim. Looking ahead at all things being equal and without any further encumbrance to the company, when do you forecast to have net debt to adjusted EBITDA ratio back to 1.5?
It's a good question. I think at the current commodity price levels, at the current cost levels, this is not achievable in the next 18 months. I'm maybe in a bit of a conservative position here, but I would see more likely something like, going slightly below 2 times net debt to adjusted EBITDA in the next 18 months.
That's great, thank you. I'm in the US and own ADR shares. I'm barred from converting them to certificated shares. In the long run, will my ownership be honoured, or do I have a worthless security?
You should approach your broker with whom you bought the ADRs and actually request conversion not to certificated shares, but back to primary shares traded on LSE. So this is the option that is advised to all holders of ADRs. And then you will have other options available. But first step is actually go from ADR to just plain shares.
Fantastic, thank you. I've got a question here, Shagaresh, thank you very much for that. What is your biggest challenge?
Well, the biggest challenge here is obviously, the dealing with the impacts of sanctions and counter sanctions, which tend to be, unpredictable, and maintaining the continuity of the business. I think that's obviously, priority number one. Priority number two, I already mentioned this answering one of the previous questions, is actually maintaining the full functional listing on the London Stock Exchange, so maintaining trading as a corporate.
Thank you. I think we've kind of touched on this one, but if there is anything further to add, Amit S, at the end of September 22, what was the reduction in net debt?
Slightly below 100 mil.
That's great, thank you. Next question, I think we've covered that, just talking about the timeline for the chairman and NED replacement. Right, Shagaresh, we've got here, are you hedged against the ruble and dollar, and where do you see the FX going?
Well, historically, we had a strict no-hedge policy, and that was, a good thing to do because ruble was traditional weakening and not strengthening. And in terms of the dollar, there was a natural hedge between, the revenue and the debt. Right now, the situation is different, and I think the main difference is actually that, ruble-dollar hedge is actually no longer available in any efficient form. So actually, we are switching into thinking about using alternative currencies in both purchases and sales. So we are exploring various instruments to hedge potential risks to yuan, for example, but not the ruble dollar, because this is just plainly unavailable.
Thank you. We've got another question about net debt, which I think you've actually covered off earlier. So next one we have here, again from Shagaresh, thank you. How will Russia creating its own LBMA affect you?
Right now, first of all, the process was just announced and not really going into anything functional at the moment. Second, the reality of the market is such that within Russia, the Russian banks, who were traditional purchasers of our gold and silver, are offering heavy discounts compared to LBMA. And I don't expect creation of Russia-only type of bullion exchange to change the situation. So we are targeting 100% exports at the moment, and therefore LBMA remains the benchmark for us.
Thank you. Got a question here as well. Are there any scenarios in which a change of registration would not be followed by a separation of assets?
There are all type of options which are on the table, and in the current very fluid environment, we are intending to do everything step by step, like with NSD exchange. We are offering step 1 and only then undertaking step 2. Same way, most likely in case of redomiciliation, first we will need to complete this step, which is in and of itself quite complex, and in the meantime evaluate all of the available options. They will include the separation of the assets, but it is also an option that the assets will not be separated. A lot of factors will play into that decision, and in the current fluid environment, it's very difficult to predict.
Thank you. Question from Joe here. How does the swap of shares on the NSD for paper shares help Polymetal shareholders with dividends?
Well, currently, the non-resident shareholders holding their shares through NSD are deprived of their traditional rights as a shareholder. They cannot vote with their shares because Euroclear has blocked NSD from translating any instructions, and likewise they're blocked from receiving dividends. If Polymetal were to pay this, they would be frozen within Euroclear and not delivered to NSD holders. By changing the NSD share into a paper certificated share, a hypothetical non-resident shareholder regains all of the rights associated with the shares: voting, receiving dividends, and importantly, the paper certificated shares can be dematerialized back in a non-sanctioned broker, which would allow the shareholder pretty much to enjoy life of a shareholder in a traditional way, like electronically trading this directly through London Stock Exchange. Again, still participating in the voting activities, and still obviously holding the rights for any dividends.
Max, not to labour the point, we've got another question on debt, just worth reiteration, I guess. And the question's here, Antonio, thank you. Which is the estimate for total debt for the year end 2022?
Well, I can tell you the rough estimate of net debt. As I said, we're expecting a reduction of around 500 mil compared to the level of 1st of July. I don't think we have an estimate of gross debt and cash, because this is a very kind of situational on the spot decision how much cash to hold.
Thank you very much. Question from Simon, thank you. How long does it take to get payment from your new gold sales?
A few working days, very quick.
Perfect. Question here, Ilya, is the decision not to pay dividends for the last period final?
Ilya, thanks for the question. Unfortunately, this is final. I think you've seen the numbers that we've published, the liquidity situation, the working capital buildup, and overall, situation in the business is not prompting for an immediate dividend payment. I think once, and also you have to factor in that the NSD exchange is not complete as well. So in a theoretical dividend payment, 22% of our shareholders would just plainly not receive dividends. So therefore, this is final.
Thank you. Another question here, just talking about that structure. Could Polymetal take a corporate action and change corporate structure even if the issue of shares stuck in NSD is not resolved?
Well, I guess a change in corporate structure is something which requires a vote, and in some options it requires a qualified vote, like of 75%, and we don't want 22% of shareholders to be blocked from that decision. And therefore, for at least 11% of shareholders could hopefully be eligible for voting on this important corporate question.
Thank you. Question here from Terry S. Is there any impact or potential impact on the LSE shareholder base of the proposal to exchange ordinary shares to certificated shares?
No. The offer to exchange shares is targeting only NSD holders. For traditional LSE holders, there will be no impact from the exchange, but I would probably use this opportunity to urge everyone on this call, if you have an opportunity to vote in favor of the board's and management's proposal. Again, I've spoken about the benefits that the blocked non-resident shareholders would get, and that this is a first step to unblock the other shareholders as well. So we think it is important for the company's corporate functionality in general.
That's great. Thank you, Maxim. Daniel B, thank you. Have there been any considerations for business expansion outside of Russian Kazakh territories?
Well, we have a small JV in Uzbekistan at the moment, but unfortunately, probably at this point in time, the company is more concentrated on maintaining, business continuity and delivering on our plans in Russia and in Kazakhstan, maintaining the liquidity of the business and so on. So probably aggressive expansion outside of the jurisdictions is not yet on the agenda.
Thank you. Question here from Darren C, just again around debt. Are we moving toward trying to be debt-free, or will dividends be paid in the foreseeable future? If debt-free, how long do we think it would take to get to this position?
Our historic preference, even in normal times, would be actually to pay the dividends. I think with the tremendous fall in the share price that we have witnessed, dividends would probably be the number one method to regain the shareholding, the shareholding, regain value for the shareholders, and therefore I would rather be paying dividends and have some net debt on the balance sheet rather than be debt-free.
Thank you. Question here we've got. Can you tell us about the access to borrowings within and outside of Russia for Polymetal? What is your outlook for next year? What about the ability to roll forward borrowing facilities as they fall due?
Well, generally, the interruption in availability of funding was rather short. It lasted since 24th of February for about 1 month, after which we have actually regained access to funding both in Russia and in Kazakhstan. In Russia, this used to be very expensive and available only in rubles, and you will have seen, the central bank key rate going up to 20% at some point in time. It's now at 7.5%, which means that ruble funding is also pretty cheap. Dollar funding is available as well from a limited number of banks, as the central bank is actually, putting pressure on Russian commercial banks to not to work in so-called unfriendly currencies of dollar and euro. However, we see increased availability, for example, of yuan lending. There were first bonds issued in yuan in August by a couple of our peers. And we see dirham also gaining traction as an alternative currency. So I think in terms of funding availability,
That's great. Thank you, Maxim. What is your opinion about the relation between assets' fair values and carrying values? Do you expect any more impairments in the next 12 months?
That's a good question. I think, again, a lot will depend on the dynamics of the foreign exchange rate, because the unfortunate need to record impairments as of 1st of July was related not predominantly to the fact that fair values have fallen. They have fallen, but not in a very significant way, mainly because of the slightly higher costs and higher discount rates. But what has happened is that the carrying values of our assets have gone through the roof in dollar terms, because ruble-dollar exchange rate as of 1st of July was 51. It's now hovering around 58, which is already meaning that the carrying values have come down, somewhat normalized. So if this situation persists in terms of the exchange rate, I'm not expecting any further material impairments as of 1st of January 2023.
Fantastic, thank you. And I've got a question from Ian and Peter. I'll combine the two again. Just touching on dividends. When do you envisage dividends to return? And I think we've talked about earlier on. And what level of net debt do you envisage dividends becoming payable once again, assuming the NSD issues have been resolved?
I'd say net debt to EBITDA below 2. I don't have an exact forecast when this might happen, but again, assuming present commodity prices, present exchange rate, I think we could see that at some point over the course of 2023.
Thank you. Next one we've got here is, could you tell us something more about the 2022 Polymetal decision to consolidate 100% of the Albazino power line? What were the main factors in order to take that decision?
Yeah, thanks for this question. We have entered into this project with a third-party partner, and unfortunately, they could not fund the project independently as was originally envisaged. So we actually had to take over in order for this project to proceed. And since this project is still value accretive, we saw this as something which should have been done, even at the cost of increasing net debt in relation to the Albazino power line.
Thank you, Maxim. We've got a question here about the Verduga option call. Could you tell us what are Polymetal's intentions, and if that intentions concur with the VTB bank interest? Do we have an expiration date?
Well, the options are not exercisable until 2023, so we are not actively engaging with VTB on this.
Thank you. Can you describe the Kazakh operations trend?
All good. Production in line with the budget. Costs also in line with the budget. Moderate tenge weakening compensated for the accelerated inflation. This is something Kazakhstan is experiencing, as well as any other part of the world, to be honest. But obviously, Kazakhstan operation performance was very helpful to the overall performance in the business in the first half.
The final question we've got here is, how is morale within the company board, management and employees?
Thanks. That's a very good question. We are obviously undergoing tough times, but probably it has to be mentioned that Russia and Russian people have gone through tough times many times in their lives, including those who are currently working in POLYMETAL. We've seen the collapse of the Soviet Union. We've seen the crises of 1998 and 2008, and we will muddle through. I think the morale is that this will pass. Probably.
That's fantastic. Maxim, you've covered off all those questions from investors that you can. Of course, the company review all questions submitted today, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Maxim, before redirecting investors to provide you with their feedback, which is particularly important to you and the company, if I could just ask you for a few closing comments, please.
Okay, ladies and gentlemen, it was a pleasure to present here on this platform. I would like to thank everyone who posed a question for their active participation, for interesting and somewhat challenging questions. So thanks for your sincere interest in the company. And please do not hesitate to contact our investor relations team for any follow-up questions. We'll try to be as helpful as possible. Thank you so much.
That's fantastic. Maxim, thank you indeed for updating investors today. Can I please ask investors not to close this session, as you'll be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and will be greatly valued by the company. On behalf of Maxim and POLYMETAL International PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon to you all.